Welcome दोस्तों to my YouTube channel Stock Market Intelligence. Today is the class number 4 and today we will learn about volume. अभी तक आप लोगों ने मेरा फर्स्ट सेकंड और थर्ड जो क्लासेस है वो आपने नहीं देखे हैं विच इज़ प्योरली बेस्ड ऑन प्राइस। मैंने तीन सेशन में इसको कवर किया है। डिटेल एनालिसिस है, कैंडलस्टिक पैटर्न्स, उसके पीछे जो बिहेवियरल एस्पेक्ट्स है बायर और सेलर का वो हम लोगों ने बहुत ही डीपली कवर्ड किया है। एंड नाउ आई विल बी कवरिंग classes number 4, 5 and 6 on volume, where we will be discussing detailed analysis on volume, and we will try to bifurcate volume section into three parts. Today we will learn only the accumulation and distribution phase of the volume. Tomorrow I mean class number 5 will be having a correlation between price and volume, and the sixth class will be summarization of the volume and the price section. So I will request each one of you, those who are watching this video, if you have not subscribed this channel and if you have not clicked the bell icon, please go and do this, because I have been I will be posting all the videos, around 200 to 300 videos in this channel, right from scratch to advanced level. After completion of volume, I have enough topic in my hand to cover it, like the chart patterns, Fibonacci, and indicators, RSI and all. So we will be discussing each one of you. So I really wanted the retail investors should get benefits from my video. I don't want to make it lengthy. If you see all the videos I have kept between 30 to 40 minutes, because if you really want to learn, you have to invest time on it. I don't want to make the things in such a way that it will be of 5 or 4 minutes, but you won't be getting a deeply meaning from it. So that is my endeavor, to help the retail investors. And if you are a true learner, 30 40 minutes you can invest in learnings for the day. So guys, as you can see on the screen, volume, as the name suggests, so this classes number 4, 5 and 6 will be a complete study on volume. So it will be a complete guide to volume price analysis. So कोई बोलता है अपने आप को कि I'm a technical analyst on the basis of volume and price analysis. So I think he will be talking all these topics, because the market is sum total of volume and price. This is something which we get immediately what the operators or the big players are doing in terms of candlesticks and in terms of volume bars. But yes, definitely we need to decode all these informations which we get from them on the screen on TradingView. Yes. So, and every indicators or the the strategy which has been developed so far in this world of stock market is based on price and volume. So if one can master themselves into candlesticks, or I mean price, behavior and the volume, then he can he can make money from the market, because market has that potential to deliver. If you, because in the last video I have explained why technical analysis is important, because it has memories and market works on patterns on the past performance, and based on those patterns you can make money from the market. So let's move to the next slide, guys. So there is a quote written on the screen that you can see here: there is nothing new in the Wall Street. There can't be, because speculation is as old as the hills. Whatever happens in the stock market today has happened before and will happen again. So that's what I was saying, why technical analysis becomes very important in today's market scenario, because speculation is very in an old way of it's as old as hills. So there is nothing new into the market. So if someone must be saying कि मैंने ये कर लिया वो कर लिया, no, everything has been done once in a once in a time in the market, and that has been repeatable in nature. And that's the reason why technical analysis has been successful, because what has happened in the stock market today has happened before and will happen again. So that's what I wanted to say to all the viewers, that's why technical analysis, people go for technical analysis, because market has memories. And people who claims to be expert or technical analyst works on those imbalance patterns. Imbalance here means a pattern where buyers were aggressive, or a pattern where the sellers were aggressive, and on that basis of those imbalance swing points or the situations, the buyers and sellers becomes active, and that's what we take we even we take our strategy on based on those patterns. So that's what this slide is talking about. Yes, दिमाग की बत्ती जलाओ. So I will be asking few questions to you guys. There are three questions that I will be asking to you. Uh, so you can see here. Now at this point, you may be asking yourself three questions that in the first three classes I have discussed about price. Now, how is volume still relevant today? So is now I wanted to know from you guys to put pressure on your brand. Is volume necessarily it's important in today's trading strategy? Is it relevant in today market I trade? Can it be applied to all trading and investing strategies? So I'm just asking to you guys, like, volume has that relevance in our trading strategy, or a candlestick is sufficient, or any indicators like the price or the RSI is important, is very important. Volume is not that important to me. So I'm just asking this question to you guys. So you must be saying, I know that volume has equally the same relevance that you give to the price, and in fact I give more relevance to the volume component, because yes, the answer is yes, because the volume is something which buyers or sellers cannot hide from us. So this is something which we get on a daily basis, weekly basis, on a monthly basis, or on a different time frames. On the basis of volume, we decide our strategy by looking the price. So it's a combination of price and volume, and every indicator is based on these two things. So if you can master yourself in volume and price, then you are there into the market. So yes, definitely volume has important relevance in today's market strategies, as well as into if you are into market. So volume, you cannot ignore the volume component. So let me explain you what is volume and average volume concept. You must be knowing these things, but yes, I will be, as I have already promised to my retail investors. As you can see, we are about to cross 2000 followers on our Twitter, and if you go through those followers, all are 85% of the followers are newcomers, and that's the reason I am here for them. I wanted to make the video in such a simplest form, बहुत ही easy way में बनाना चाहता हूँ, so that they grab this information and they can move to the advanced level, which I will release the video in our coming days. So yes, what is volume of trade? So now I will be asking to you guys what is volume, and then we will be discussing what is the relevance of average volume. Now, volume of trade refers to, so now you can see here, guys, the volume of trade refers to total number of shares or contract exchange between buyers and sellers of a security during trading hours of a given period of time. So yeah, so what does it mean? So it's a total number of shares exchange. So a volume will have buyers and sellers both, and you whatever candle you see, I mean the bar which you see on the volume line on your trading screen. So that volume, if it is green or red, it does not mean that, if it is green, it does not mean that the whole volume was buyer, or if it is red, the whole volume is the whole mm, the people who have exchanged shares are sellers. It simply means that the we come to know by looking that bar that the maximum were sellers and the majority were buyers, if it is green or red, right? And there is an average volume concept as well. We will discuss what does it means. And if the volume is about that average, we say that the volume was higher today, more people have participated today, more contracts were exchanged, total number of shares were traded higher today. So this is what average volume is all about. But yes, volume is nothing but it's a buying and selling, the total number of shares that has been exchanged for that particular period of time, or the contract that has been exchanged between buyers and sellers. So if you see a candle, I mean a bar on the volume for the day, if it is a red, so there will be a buyer and sellers into it. So but yes, if it is a red, then uh, you can get it clarified that the majority were the seller. But I can show you situations where candles were red, but yes, and the buyers were aggressive into that, the people were, I mean the operator was accumulating under that, the red shadow of the bar. So that is what we are here to decode. Every bar has buyers and sellers under the volume. But how can I know that who was aggressive today? So if you wanted to understand that who are aggressive, so you will be going with the color. But if I ask you, like the volume bar is very small and it is red in color, but the price has moved 5 or 10% today, there was no volume, what does that mean? So you need to understand all these things, which I will release in our in my coming classes. I will try to match price with the volume. That's I call law of efforts with law of results. So that's these topics are going to be very interesting. Now I am I am confluencing price with the volume in my coming classes. Today I will go with the basic things of the volume. So here we know that the volume is nothing, it's a sum total of the shares which has been exchanged for that particular day between buyers and sellers, and we get a single bar for the time frame, which can be red or green. But I wanted to know who are aggressive for the day, who was the majority people. I will show you so many incidents where prices were rising and volumes were falling. What does that mean? So these are the things which you need to understand, and how average volume is not sufficient enough to understand whether whether we should take entry into this segment, into this strategy. So let's decode one by one, guys. So now you have come to know about the volume. Now why trading volume is important? Now this is the question. Now you see here, I have written some points why trading volume is important. The volume of trade is a measure of the market activity and liquidity during a set period of time. So higher the volume will the more volume will tell us what was the market activity for the day. So if, for example, if the volume is high, that means more buyers and sellers participated in that script. For example, in last 10 or 20 days there were no buyers and sellers, and the volume was below the average of 20 days, but suddenly I found something where the price has crossed the volume average of last 20 days. That means something has happened with that price, and we need to be very much alert. We should know what was the reason behind it. If you get that news, that's good. Otherwise you need to understand whether that's the support or the resistance level, and how why these activities are happening. You need to get alert when the situation happen. Now coming to this part, like liquidity here means more number of buyers and sellers will assure that you can sell your shares. When you sell your shares, there will be enough buyers, and when you want to buy, there will be enough sellers. That's what liquidity is all about. So why we see upper circuit and lower circuit? It simply means that if it is hitting upper circuit, there is only buyers, no sellers to it. So we always look for stocks which has a very good volume, more than 5 lakh 10 lakh kind of volume, which assure that the blue chip companies. Why this blue chips company, whenever you wanted, but whenever some bad news comes into micro cap or small cap companies and there is a limited buyers, you generally don't able to sell those shares because it generally hits the lower circuit. So liquidity is something which we always look into, and we always look for stocks which has a good volume. So simply a volume of a trade is a measure of market activity that you have came to know, like who was aggressive today, buyer or the seller. And liquidity is something which volumes indicates that both the buyers and sellers are available to it. So liquidity is very important. And I have said why liquidity is important. Upper circuit, lower circuit is the example. So whenever you feel wanted to sell, you can sell your shares, but whenever it hits upper or lower circuit, you when it hits the lower circuit, you wanted to sell, you cannot sell it because there is no enough liquidity available. So now higher trading volumes are considered more positive than lower trading volume. It's very simple. Yes, definitely, if the volume bars are increasing, that means the activities are happening very on the higher side. So higher trading volumes indicates positiveness about that shares. If it is if it is a red bar, that means automatically you will come to know the more sellers are aggressive, and if it is a green bar, you may come to know that the buyers were aggressive. But it is more higher trading volume is more positive than the lower trading volumes. What does it means? It means, like, there are shares where 10,000, 20,000 shares are exchanged for the day, and the stocks hit the upper circuit. In that situation, you need to be very much careful, because sometimes if the bad news comes, the circuit may not get open, and your capital may get deteriorated. So that's the reason you should have that liberty of selling the shares at at any point of time. And that's the higher trading volume will assure of your exit and entry. and other ways, because they mean more liquidity, better order execution. That's what I was explaining to you guys. So higher the trading volume considered is to be very positive than the lower trading volumes, because it assures more liquidity, and that will also assure your timely exit from that stock and entry into that stock, and better order execution. That's what I was telling. So coming to this volume, if you see this picture, you will come to know that's what I was talking about. So these are the red, you can clearly see the red bars, and this is what we see on our trading screen. And you see here continuously there is a cluster of green volume. Here also we see a cluster of green volumes, and you can see red volumes are also there, but their bar sizes are smaller. So what does it mean? So red is the falling volume, falling when the people are exiting from this script, whatever the script you see on the upper screen, upper part of the screen. So here you see the green volumes are the growing volume. That means if this kind of volumes is happening on the volume line, so you can clearly, your mind must be saying to you that the price must be increasing, because there is more and more participations of the buyers. So because we have been taught in this way, and this has been taught, like, the higher the green volume will it simply means I have removed the price section. So it simply means that price must be okay, but this is not the case, guys. This is not the case. This is what I wanted to show in my classes number 4, 5 and 6. You need to stay tuned with these classes, because I have divided the volume section into 3 segments. So you need to complete all this in order to get a complete analysis on volume. So what I was saying, guys, within this volume bar, there is a buyer and the seller both. But yes, it has closed it has closed for that time. It is in green. That means buyers were more aggressive. That's what we have been taught. But this is not the case. I will show you many situation. We will go to trading view session, and I can completely show you when the prices were rising, green volumes were forming, but the volume was declining. The falling volume was higher within this bar. So this is how we need to decode it, guys. This is what I wanted to teach you. The purpose of creating these classes is to extract meaning from it. This red volumes. So for example, on the support level, you find this the bigger red candles, but the volume is the price is not falling. What does that mean? So there must be, I can feel like, the price is not falling, volume is rising or the support level. That means simply means that the people must be accumulating within this red shadow of the candle bar. So this is what I wanted to show. You cannot blindly trust on this volume candles bars ki, it's a complete buyers. No, there will be a buyers and seller. It may be a 51% kind of buyers, and 49 must be sellers. You should know it, what is happening inside this bar. So we will try to decode one by one. So this is what I wanted to say. Red is a falling volume. That means people are exiting. That's what we have been taught in this way. Let's understand the simplest way, like that only. And green volume is like, guys, is something which is growing in nature. That means volume is increasing, at the same time price must be increasing. So there are buyers into it. This is how we have been taught into. Let's try to decode, is it true or false? Let's see here. Now coming to the average volume trading volume concept. So average trading is a technical indicator used by investor that refers to number of shares of a particular stock on an average change hands during a single trading day. So a single bar for that time frame, like it can be a 1 minute to 1 day, 1 week, 1 month. So we will assume like this is a daily chart, and this candle is for that particular day. So this is the volume for the day, which is see here the average daily trading volume. Can you clear on the span of time, 5 days, 10? So these are all candles for that particular period of time. But yes, you can see a clear, if you see the previous image, you won't be finding a white line on it. So, I have drawn a white line into it. So what does this line tells you? It is a average volume. An average volume can be of 5 days, 10 days. It depends on your strategy, what you use. So it is nothing but if this line is getting drawn, it is based, like for example, it's a 20 days moving average volume. So it will calculate the last 20 days volumes, and it calculates its mean. So this is the mean of that particular period of time, whether it is 5 days, 10 days. You need to decide. It is available on trading. I will show you how you can plot this line. Now I have used this as a 20 days moving average of the volume. I'm talking about volume part, guys, not price. So you see here, suddenly you found a red candle which is above this 20 days mean. That means the volume for that session is much higher than its mean of last 20 days average. But yes, I don't know what had happened at this level of the price segment by increasing this volume. But after two trading session of red candles, you found, cluster of white green candles. It means simply means that someone must be showing you to exit to remove the weak hands, and then suddenly price has started moving up. So this is what you came to know. This red candles, by looking simply to these red candles, I'm not showing the price right now. You may exit from this position. You may feel that the sellers have become aggressive, but you see here, by looking this 5 or 6 days green candle, I can get an assurance that the price must be increasing. So this is what you need to understand, whether it's sufficient to, understand that the price is above the average, we should exit. It's an impulsive, there can be an impulsive movement because volume is supporting the price. This red candle is supporting the price. If the mal, for example, if this this is the red candle and the price has fallen by 3%. Now by looking 3% in this volume, you may get a fear of further fall down. But you see here what had happened. Our green candles has emerged after two trading sessions. So this is what you need to understand: who was inside this bar, whether 100% or 90% or 80% sellers, or it was a 51 or 49. So if 51 is the seller, 49 is the buyer, then it will emerge as a red. But 49% still there was a buyers into it. So that must be giving an assurance, and price is not fallen. In that way, the volume has increased. So this is how you need to analyze the volume with the price. But we will go slowly steadily. The next video will give you more clarity on price and volume concepts. We will try to merge volume with price, and we will try to extract meaningful information from it, guys. So now you see here the average, we simply means that if the volume is increasing above the mean, it simply means that there is more participations of buyers and sellers, and there is more liquidity available to it. But if you see here, this is the last which I now you see here the volume is increasing, so you must be getting a sense, the price, the volume, red candles, were there, a cluster of red candles were there below average or near to average of 20 days volume average. So now suddenly you found these green candles coming up, and which is above the average. So I must be getting an impression that the price must be increasing, and volume is supporting those price. But yes, it may not be a case into it, like the prices may be stagnated and the volumes are increasing at the support. This may be a situation. I'm just trying to make you should not get you should not have a factual kind of feelings that the volume is increasing, that means price must be increasing. I have seen many of the situation where volume are in grade and are in green, and where the price is consolidating. So this may be situation, and if it is in green, the price must be falling. So you need to understand, that's what we call the synergy between price and volume. If the synergy is not happening, so something is wrong. Like for example, if the price is falling here and the volume is rising, so what does it mean? So there is no synergy. So efforts are more, but the results are not there. Now you need to be very much alert. What is happening behind these candles, within this bar? So this what we wanted to try to decode. So this is simply, if the price is above the average, I am saying two things: that is more participations of buyers and sellers, and there is a more liquidity available here. But if the price is not reacting according to the volumes, that means that is a situation you need to be very much alert. I will cover detailed analysis on price and volume in the next class. Be stay tuned, subscribe to my channel, click the bell icon, because I can release the video at any point of time. Yeah. So coming to this part, guys. So this is the average line which I have shown to you, and this is a line which I wanted to tell you. Now I will ask you one thing. This is an average line of 20 days volume, 20 days moving average of the volume. So but I wanted to show you guys, this is also volume line, this is also volume line. But I wanted to ask you guys, is this curve, if you see this graph, you may get an idea. You may get an idea that the volumes were rising. It was rising. That's the situation. You see here, guys. This was the image. So this is what I have taken. This curve I have taken. That simply means that the volumes were rising. That's the reason the average has got, mean has got up, has become an uptrend. But you see here, this is also the volume line. What this line is telling you, when there was a volume rise, but in actual there was a flat curve on the volume line. You see here, guys, and you see the steepness. You see the steepness upside, and you see the steepness here. What does it mean? It means simply means the steepness. This steepness is telling that the buyers are aggressive, but this steepness is saying, even this steepness is saying that buyers are aggressive. But in the steepness of this volume line and this volume line has a huge difference. You see, this is a curve, a camel. When you see like this kind of structure, like a mountain, you see here, it's a flat. The volume was rising, but volume was falling here. What this line is talking about? You see here, this was consolidating, this was declining. So what was happening here? What was happening here? The volumes were below average. The volumes were below average. Look at here. The volumes were below or at par of the average, but in actually the people were exiting from this share. And when it started moving up, this curve gave me for immediate response. The steepness is very high in compared to this, because if I draw a line on this line, on this top points, you will find there is a breakout here. That means, I mean, the volume is increasing, which the trend it was maintaining on the declining side. But suddenly I found there is a breakout and there is steepness, and suddenly I also found there is an increase in the average volume. That means the buyers were aggressive. And if this kind of situation is happening, I will get a confirmation by looking to the price. The price is also increasing. That's the real movement of the operators. The big players are buying it and they are aggressive. But after looking this consolidation zone, you see the sellers were exiting, and you must be thinking like, you must be with the shares, you are holding it, and you must be saying that it is the volume is not that impulsive and the price is also not falling. But you see the players were exiting, and you can also find the price was falling. I will show you each and everything, but I wanted to show you this curve is not same as this curve. This this upward movement is not, the steepness into this upward movement is not same. The consolidation and this declining volume is not same. So this is what I wanted to show you guys. So average volume cannot give you the better picture. Yes, you can have a understanding of the price is getting, the more buyers are coming, but that is not the way of analyzing the volume. I have used here as an accumulation distribution indicator. It simply means the red volumes are falling volume, people are exiting from it. How many people are exiting it in real sense? By looking this volume, I cannot understand the people are exiting or not. It can be a buyer, seller, both. But yes, by looking this curve, I may clearly get an indication that sellers are exiting, the players are exiting. But by looking this steepness, I will get an assurance if the price is hitting 5%, 10% upward, and this is the curve on the volume line. That means the big players are accumulating it. But you see here, it was the average volume was parallel. It was consolidating in nature, but actually it was falling. This steepness is different. You see the mountain curve, and you see here it is a flat curve. So this is what I wanted to show you. Let's do the practical thing. So red volumes are the falling volume that I have taken. The people who are exiting, it will show you this line is exiting. The players are exiting, and this line will be accumulation line. So people are accumulating or buying it. So but here you see this curve and this curve. There is a zigzag, more zigzag, impulsive and corrective movement. But here you will find a mountaineering kind of situation. So you may not get a picture clear here. So let's understand this with simplest way, in a simplest way. So let's focus on trading view. Practically we will do, I will show you two examples in this video, and we will try to understand how this indicator is working and how it can help you. So yes guys, let's move to trading view platform. If you have not subscribed this channel, I will request again and share this with your dear and near ones who really wanted to come into market. This channel will have more than 2 to 300 videos based on all the topics that will make you a good technical analyst, and this is how we grow in our life. Let's move to this trading view setup. So yes, last time I had discussed the candlestick pattern, so we will close this one. And now you guys, you need to understand this. Let's so this is Prince pipe, chart on a daily side. Let's focus on the daily first. By looking this, this price movement, clearly uptrend, but again it has become consolidation. It is consolidating, formed a head and shoulder pattern. Yes, definite. And now you see here this volumes graph, and look at the price, which is 5.94%, and look at the size of this volume. I'm talking about this one, right guys? So let's understand this. Now you look at to this part. You see here, it's a 5.94% candle. This candle is 5.94 candle. Just a minute. Five. Now you look at to this candle, so it is almost 20% kind of upper circuit kind for the day. And look at the volume is just much more up than the average volume, right? Average volume line. So how can you draw an average line? You go to volume section. There is a by default 20 days moving average setting, so you need to just go to style and click this volume. If you click this volume, there will be a line to it. You can color it in your way, in your own way. And you, if you remove, if you don't click, if you just keep it like this, so the volume line will disappear. So this is how you can put 20 days or 10 days moving average volume on this volume line. And now you can understand that this volume is much more than the previous and the average of last 20 days volume. So now you see here guys what I was telling. So it's a 20 days price movement for the day, and you look at the volume size graph. But you see here the volume line, uh, there is only, I can say, like 20 or 30% kind of difference between this volume bar. But you see the price movement to it, it is only 5.946% and 20%. But you see here there is a difference of almost 3 times of the price, but the volume bar is almost 20% lesser than this. What does it mean? So here is also a buyer, but there is no that impulsive movement into price. There is a 5% kind of movement, but here the price movement is very much higher than this volume line. But look at to here guys, this candle, look at to this candle. This is much bigger than this candle, but what is the movement into price? It's 10%. This candle itself is giving you 18% kind of movement, but this volume bar is giving you another 10%. Now this candle is also giving you 10% return, but look at to this candle and this candle. So what does it mean guys? This candle and this candle more or less same, this one and this one. This is giving you how much? This is giving you 9%, this is giving you 18%. So you need to understand who are there into this, whether it's a pure buyer into this. If it is a pure buyer, then this would have moved much higher, like 20% kind of movement. But no, it is restricted to 10%. So there it went up to this level, and then there was a seller to it. So you need to understand this candlestick patterns also. I have covered detail in my previous classes. Now you see guys, after coming this candle, this average volume mean has also got upside, but there is a price consolidation. And now you can see there is a average line is almost flat here. But I can show you how the people have exited at this level, the big players, or how the sellers were there. So we will use the indicator uh, accumulation and distribution. Yeah, this one, this indicator, you can use it freely. So now I will just try to just a second, I will just change the color of this line. Yeah, Now you see guys, now on the right hand side you will find the volume line as well. It will be better. Now I was talking about, now you see here the price has not fallen from 790 to it came to 585. So price has fallen by almost 25% kind of returns. You can measure it, just a second. 25 kind of, I've just before coming to this where I did an analysis. So 25% was the fall, and you can clearly see, the price was rising, and the volume was declining. This was the peak of the volume of this Prince 5, which was 2 million, 2.04 million volume, but the price was rising, and there was also a declining in volume. That simply means the falling volume candles were higher than the buyers, but still the prices was rising. And you see after, so what happened, what generally happens, you see the candle, if you see the Prince pipe movement from 100 rupees to 790, there was increase in the volume itself, there was increasing volume, at the same time increasing prices. But at this point of time the big players started rising the, we call it, the selling climax here, we call it the buying climax. Here, from here there will be more campaign into media, and the big players will start advertising this stock, accumulate. So retail participation comes into picture because it has moved 400. Now they will say it will go to 1000, and people enter into it, and at that point of time the big players start, yeah, exiting from this kind of position. But yes, they don't sell everything at a one go. They sell 10%, 20, and suddenly, and they, after that, they exit, and that's the reason the stock has fallen from its peak by 25%. And that's, and if you see the volume also, this volume candles, by looking this volume candle you may get enter, because the volume has come, the price has also moved by 10%, you may get entry into it as a swing trader. But you see what had happened, the price is rising, no doubt at all. But yes, definitely the movement of the price is not that frequent that it was earlier. So now looking to this volume, it is also above the average. Here also if you see, it is up by 5%, negative by 5%, but it was closed because it is there was a gap down opening, and again it moved up, but there was a continuously selling, and the volume. So I need something, what I do generally, I just draw a line to it. If it is a falling falling trend line, I will make, if it is not crossing this line, or if it is not crossing this part, uh, or this part, so I will not at all be interested in participating in Prince pipe. So I want the price, volume should come, real volume should come, the buyer should come into picture. And you see here, if you wanted to see at this point of time, you look at here. So if you have drawn like this, you will find something breakout here, and after that you see what is the movement of the price. So this is what I wanted to show you. Now you look at to cams, now you look at to the cams. So you cannot get a full clarity by looking the average volume. This is not the right way of looking into volume. So now you see the prices were rising, at the same time volumes were declining. But yes, you need to understand this, guys. This is the volume which is above the average line, and after that it has moved up, and suddenly you see this big candle, and this price was 2% negative. What is happening at this level? What is happening at this? So the into this red candle, this bar, the seller has exited the major part, and because the prices was rising, the previous was, it is 15% up, it was fine. So retailer participated into, but the big players exited, and this is the reason the price has fallen. And this line was increasing, guys, this average line was increasing, and this line was falling. This is what I wanted to show you. The real picture will come into effect only when you see the accumulation distribution curve. This is the falling, you see the cluster of red candles, this even the average has started declining 20 days, and this accumulation distribution line gives earlier picture to you to take your decision. So if I talk about CDSL, look at to CDSL. Now the volume has not sparked the way it should spark, but yes, you can see clearly this was the rising point of this was the candle. Just a second. Yeah, so look at to this candle, price candle. this is up by 0.55, but you see this is sorry, 18% it was up, and the volume was also supporting, and we can clearly see this was a very good movement into accumulation. So there was a real buyers and the price has started. But you see here guys, what I wanted to show you, you can draw a line into it. If you see a consistent, the price is coming to this volume, but who else are going to participate? But you see here, or you can draw a line like this also, trend line. You see here, when the volume started in an uptrend, you found the prices are also moving, because the volume has increased from 10 to 17, and even the red candles are showing above the average line. That means the real buyers have entered. Now at this point of time, this is the line you can draw, horizontal line, and you see when it has passed, you see cluster of green candles, green bar. It means, simply means, these are the real buyers, these are the real buyers, and you see how the prices move, and this is how you get a early confirmation. I can get an 60% kind of movement in last 5 6 7 days trading session, but when it has crossed this line, this one guys, this bar, when it has crossed the real, you see the volume has moved from 17 to almost 20 23 30 millions kind of, 3 crores kind of trading volume has happened in last, has moved from 18 to almost 50% kind of jump into volume. And this cluster of candles and this volume rise will clearly indicates, like, the people have entered, the now new buyers or the new accumulators or the big players are accumulating it. And now situation has emerged here also. Now we are also participating in CDSL. Now you see here, in last three session after this breakout retest, you see the three candles were positive on CDSL. Even the volume is also rising. Now you can zoom it out like this. We are not sure about this, what will happen in CDSL, but yes, when it will surpass this line, now the volume will be about 30, which was the earlier high of the volume. So if it is surpassing another level of volume guys, now you need to be very much alert and need to be confident that if the price is increasing, even this volume candles are increasing. Just a second. Volume bars are increasing, and we can clearly see in last two tradings it is above the average. But I want to see the actual buyers to come into this stock. If it crosses this line, it will break the earlier volume trading, which was the high at this level. So that clearly means the actual accumulator has entered, and that will be the time to enter into this stock, and you can participate in the journey of this stock. This is how I do analysis. But yes, there is lot and more to volume classes. The next class will give you a picture what is happening with this candle, with this candle. So we will try to decode synergy between volume and price, why these candles are forming and why these volumes are consolidating. We will try to decode each and everything on this volume part, but this is something which I wanted to show you. Accumulation distribution line becomes very important, because these are the accumulation line. People have accumulated, people have not exited yet. If they have exited, they would have exited, then this line would be on the declining, but this is consolidating. That means they are into real consolidation phase. The actual short selling has not happened at this level. So now I am just waiting for the volume to cross this line, and the price, if the price is also supporting with this volume, the efforts is equal to results, then we can participate for the next leg of journey into CDSN. So that's it from our end for today's session, friends, and this is how we will learn. Please subscribe to this channel and share with your near and dear ones, and click the bell icon for instant notification, because I will keep on posting videos on this channel. So that's it for today's session. Thank you so much.